Indian markets have been consolidating for quite some time. Global markets have been supportive. US markets particularly have been extremely supportive. And we have found that FIIs have changed their stance and have been bringing money into India once again. Under the circumstances, we find hardly any reason for Indian markets to come down sharply. The negative bias, if at all there was ever any, has dissipated, and there is a distinct positive bias. However, the markets lack solid trigger, and that's the reason probably why the market is languishing in a range, and it's been trading with a positive bias. Couple of factors which is bothering the market has been continuous increase in crude oil prices, which definitely does affect Indian economy, Indian capital markets, and Indian corporates by and large. The second factor, which is really worrisome, has been the lack of rains during the month of August. The forecast for September is much better. However, the deficit which we are staring at now doesn't augur well for Indian economy and Indian agriculture in particular. Under the circumstances, there is a sense of nervousness as far as rural economic recovery is concerned, and that's kind of getting reflected in Indian markets. The sectors which are exuberant now have been metals, on the back of the fact that Chinese stimulus expectation is growing stronger. Chinese central bank have facilitated through multiple measures, and expectations are that further measures will be taken. This does augur well for global commodity prices, and Indian metal sector has also been moving up in the expectation. Having considered all this, what we believe is that this better strategy for Indian investors would be to continue the journey of value investing. They should continue to pick interesting and attractive stocks at appropriate valuation at current levels for a long-term hold. We find certain pockets in the BFSI still remaining extremely attractive. Large banks in particular have not moved up and have been languishing. We can talk about HDFC Bank. I think this is one stock which definitely merits investor attention. They can pick up this stock for their long-term portfolio build. The other stock which we would like to recommend is Reliance Industries. The stock has corrected because of multiple reasons, market forces and others, but at current levels, it does remain attractive. Value unlocking at some stage will definitely happen, and somewhere geo platforms, retail, as well as green energy will have to be segregated by the company. As and when that happens, or it may happen in a phased manner, value unlocking, substantial value unlocking will happen for the investors. So investors would do good to buy this share at current levels. Overall, we maintain our positive bias on the Indian markets. Thank you.